it's Vivian, your hot stock girl. Today I'm going to discuss ETFs and why you should consider them when you invest. ETF stands for Exchange Traded Fund. In most of my videos, I discuss companies you might want to consider as an investment. Sometimes I recommend the stock, but more often than not, I suggest that you don't buy the stock based on its valuation. As an investor, it is always important to do your own research before making any type of investment, especially when you buy individual stocks. The fact is, no matter how much research you do, companies sometimes fail to execute on their business plans. Failure to execute will cause the stock price to drop. When the stock price drops, investors lose money, sometimes a lot of money. The best way to avoid financial ruin when you invest is to diversify. If you diversify, you are spreading out the risk over several different stocks or other types of investments. Buying stocks might seem like fun when they go up quickly, but they can go down even faster. Stock research can take years of experience and many hours and days of your time. And even then, the stock you buy could go down. Every great investor has lost money at times owning individual stocks. That is why I want to discuss ETFs. As I mentioned earlier, an ETF is an exchange traded fund. So let me break it down. For this discussion, I will be talking about stocks. A fund is where investors put in their money as a group, which allows the fund manager to buy several different stocks that will be held in the fund. For many years, investors who wanted to diversify bought mutual funds. With mutual funds, you get professional money managers picking the stocks that are in the fund. Having a professional do the research on each of the individual stocks comes at a price. These professional money managers get paid very well to manage the funds. Because of this, there are high fees that come with owning a mutual fund. Many mutual funds have load fees, which could be as high as 5%. This means if you invest $1,000 in a 5% load fee, you only have $950 working for you. Mutual funds also have 12b-1 fees, which cover their operational expenses like marketing and commissions. These 12b-1 fees could be as high as 1% of the net asset value of the money you have in the fund. Mutual funds also have management fees, which range from 0.5% as high as 2% of total assets. Some funds even have redemption fees, which you pay when you sell the mutual fund. You can shop around and look for mutual funds with lower fees, but that will take some work on your part, and fees are still higher than ETFs. With all of these mutual fund fees, it will be nearly impossible to see market-beating returns over the long run. ETFs, on the other hand, have much lower fees and also have a huge advantage because you can buy and sell them just like a stock. An ETF owns a portfolio of stocks in its fund just like a mutual fund, but ETFs are much easier to buy and sell. Just find the ETF you want to purchase, type in the ticker symbol into the brokerage account with a price and number of shares, and you will own that ETF. The average ETF had a fee of about 0.5% per year, with sector ETFs being slightly higher. Each year, you will still have 99.5% of your money working for you when you own the ETF. Holding ETFs that track the market should get you market average returns over the long term. If you pick certain sectors, like the tech sector or a China sector ETF, you might even beat the market averages over the long term. Buying different sector ETFs on a regular basis with money you want to invest will make you a very good investor and provide you with a secure future. ETFs are also easy to sell. Just sign on to your brokerage account, type in the ticker symbol, price, and amount of shares you want to sell, and you will be back in cash. You can sell any amount of the ETF shares you own at any time. You can even day trade ETFs if you want to. So, there you have it, my thoughts on ETFs and why you should consider using them to invest. I'm Vivian, your hot stock girl, and please be sure to subscribe below and check out my other videos for more great investment ideas. Bye!